The Wall Street versus Main Street saga continues, with Main Street investors coming out on top, with Robinhood allowing people to trade shares of GameStop and AMC, with Robinhood getting hit with a class action lawsuit, and with the SEC coming out saying that they're going to work to protect retail traders. But before you jump in victory and dump all your profits into this cryptocurrency, I need you to understand how to protect your money. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. Main Street investors came out on top of Wall Street when it came to the GameStop and AMC short squeeze. I already talked about what happened in my last YouTube video, so if you haven't watched those, I'll link it for you in the description below. But a very quick overview is you had these people on a Reddit forum called Wall Street Bets find out that you had these companies like GameStop and AMC that were heavily shorted by big hedge funds. So these stocks had major downward pressure because these hedge funds were shorting against the companies, meaning they were betting that these companies would go down. And then these people on Wall Street Bets said, if we start buying these stocks, then the price will go up, and then the hedge funds will start losing money, and then they'll be forced to cover their short positions, which would cause the stock price to go up. And the people on Wall Street Bets and the retail traders that participated in this won. Stocks like GameStop were up more than 1,700%, and so the retail traders, the regular people, the amateur traders walked away with all the money, while the hedge funds, some of them actually almost went bankrupt. People were calling it a real stimulus check for the average person because now people were turning $1,000 into $10,000. Some people turned $10,000 into $100,000, and some people turned $100,000 into millions of dollars. This short squeeze that was triggered by regular people and Main Street really shook up Wall Street, and that's why you saw the major brokerages like Robinhood stop the trading for stocks like GameStop and AMC and BlackBerry. As soon as that happened, people were furious because people felt like they were being shut down by Wall Street and regulated by Wall Street. It's not Wall Street's job to regulate you, it's the SEC's job to regulate you, and the SEC has said that this type of short squeeze is completely legal. I mean, hedge funds have been doing it for decades, but now regular people felt like they were being shut down because the big Wall Street brokerages were shutting regular people down, while hedge funds have been able to do the exact same thing and make all the money doing it for decades. That's when Robinhood got smacked with a class action lawsuit, and that's when the SEC came out and they said that they're going to work to protect retail traders, whatever that means. Congratulations, if you were a part of this trade, chances are you made a lot of money. Now, I need you to be smart and protect your money. Nothing can go straight up forever, and the investors that make the most money are not the investors that trade on emotion and get excited and speculative and leverage up their investments every single time. It's the people that trade on financials and make their investment decisions based on financials because they believe in the long-term value in what they're investing in. There's been some buzz in the Wall Street Bets forum talking about how they want to do what happened with GameStop in the cryptocurrency world with a cryptocurrency called, well, there's some debate over the name of this cryptocurrency and how it's pronounced between Dogecoin and Dogecoin. But let's keep things simple. Let's just call it Dogecoin. Dogecoin is a cryptocurrency that started off as a joke. It was based off of a meme. And now people are taking the hard-earned money and they're throwing it into this Dogecoin, hoping that they can take it up to the moon and leverage up their money even more. Look, I love the fact that you've been able to make money. I love the fact that you've been able to stick it to the man. I love the fact that you've been able to beat Wall Street at their own game. But now what I want you to do is I want you to be able to protect your money and protect your wealth. Higher potential risk comes with higher potential returns. Yes, maybe you can double your money on this because everybody's dumping their money into this random coin, but what you have to understand is if you really want to build long-term sustainable wealth, you cannot do that by just leveraging up your investments and just throwing it wherever things are hot. The great thing about this whole GameStop saga is it got a lot of people interested in the stock market and investing and learning about finances, but now what you need to do is protect yourself because nothing can go straight up forever, and anytime you have a bubble created, anytime you have all this euphoria that's especially fueled by debt, because right now we have the highest amount of margin trading happening than ever, which means you have more people trading on debt than ever before. When you have all these factors coming together with everybody trying to get rich quick, that is what causes bubbles, and when bubbles burst, people get hurt. You have beat Wall Street in their own game. That's great. Now you need to understand that if you want to keep this money and if you want to grow this money for yourself, you got to be smart with it. I mean, we're already kind of seeing the regulation starting to happen again. Robinhood already said that they're going to start regulating cryptocurrency trading on their app. But what I need you to understand now is there's a difference between emotional trading, where you're just trying to stick it to the man, and trading, where now you're trying to work to build your wealth. When you make your investing decisions based off of emotion or greed or speculation or on the hopes of getting rich quick, it is much easier to get burned because you're making these money management decisions based off of emotion rather than financials. My worry, I'll be talking more about this in a later video, which is why if you haven't subscribed to our YouTube channel yet, make sure you do that. But my worry is all of this kind of drama and excitement that's been going on is going to skew people's understanding of what a good return on their investment is. Because nowadays, I mean, if you tell somebody you got a 10% return on your money in a year, they're gonna look at you like you got breadcrumbs. High potential return, high risk. When you do the highly risky investments, yes, you can make a lot of money very quickly, but you can lose that money just as fast when the bubble pops. And so right now, when people are just trying to buy up random stocks now just because they want to keep the same momentum and just do it all over again, that way you can double your money, double your money, double your money. Now you're playing a game of hot potato, and you're just trying to toss the potato as many times as you can. That way now you're just blowing up the bubble as big as possible, but the person that will be left with that potato will then lose everything. I'm glad that millions of people got a taste of what it's like to win in the stock market, but now I want you to understand what it means to build long-term wealth as well, because the last thing I want to see happen to you is you take this money, you bet it somewhere else, and now you're down to nothing, or maybe even less than nothing, because you were gambling on margin. And if the bubble pops while you're holding the hot potato, then you're the one that's got to pay the price. Now, if you do want to learn more about how to invest your money the right way, I already made a video where I went over how to do that, and I'll link it for you in the description below. Now, I get it. There's a difference between trading your money and investing your money. Trading your money is when you buy or sell a stock quickly. That way you can make money quicker. Investing your money is when you're buying a company for the long term, longer than a year, because you believe in the underlying value of a company. If you want to make money with investing, this is a long-term horizon, and it can make you money sustainably for the long term. Trading, the goal is to make your money very quickly, which means it also comes with way more risk. You can make more money right now with trading, but it also comes with more risk. 100% returns in a day are not sustainable. 1700% returns in a month are not sustainable. These are great if you got some of it. It's great if you were on the winning side of it, but I need you to understand what's real, what's sustainable, and what can help you keep your wealth, and what was really fortunate to happen. I know many of you watching this have made a lot of money, and when you get into that winning spree, you get that hot hand fallacy, where you feel like you can't lose because you just keep winning and winning and winning. But I need you just to take a step back and understand what you have done. You have beaten Wall Street. Great. Now what are you going to do with your wins? Do you really want to leverage it all and throw it back onto the table? Or do you want to keep it for yourself and understand how to protect it? That way you can keep your winnings. I want you to be able to build long-term wealth. And if you want to do that, you got to understand what a real investment is, where the value is, and how you can add value. That way you can continue to build wealth for the rest of your life. There's a lot of emotion in the market right now, and this emotion can help fuel you to make a lot of money very quickly. But then you can lose that money just as fast, and it's almost impossible to predict when it's going to happen. Will it happen tomorrow, a week from now, a month from now, or a year from now? Nobody knows. And so you just want to make sure you're taking a step back, you're looking at things logically with a calm mind, because you want to be a financial investor, not an emotional investor, because the people that make the most money over the long term are the people that invest financially, not emotionally. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. What about the 2008 short squeeze with Volkswagen? This was right after GM went bankrupt and Chrysler was contemplating bankruptcy, and the whole auto industry was collapsing during the 2008 crash. So